Would you like to learn from those that are taking their lives, their businesses, and their passions to the next level? Best-selling author of Speakeasy and master connector Lou Diamond is here to connect you to some of the most inspiring and amazing people on this planet. Get ready to thrive loud with Lou Diamond.
Hey, Thrive Loud listeners. We have a series of special episodes coming your way that took place at the Wall Street Conference in Palm Beach, Florida in late May of 2025. I had the pleasure of speaking with many amazing leaders on that day from a number of different industries at this conference. We have episodes where we feature just one of the guests, and in a few instances, we paired some guests together into one particular episode. Now, I'm going to put this intro disclaimer at the top of each of the episodes within the series. For those that listen to Thrive Loud, we apologize as there was a lot of people milling about as we were part of Radio Row, and there was quite a buzz on the conference floor. For those that watch Thrive Loud on either YouTube or Spotify, we apologize for the lighting and video quality, as it was a little challenging to capture high-quality video, both with the setup we had and the very bright Florida sunshine trying to jump in and steal the spotlight, or should I say sunlight. We wanted to thank the Wall Street Conference for having us. Special thanks to Jason Lyons for connecting with us there, as well as C-Suite Radio. Let's get to the episode. Welcome, everyone, to another spectacular episode of Thrive Loud with Lou Diamond, connecting you to the most inspiring and amazing people that are thriving each and every day. I'm your host, Lou Diamond. We are still here, as you can tell by the buzz in the background, at the Wall Street Conference in lovely Palm Beach, Florida. And now I am honored, thrilled, and excited to have this fun conversation with Marc LoPresti. How are you, sir?
Oh, great. Thank you for having me. I'm honored and thrilled and excited about this conversation.
People don't understand how well-dressed he is, head to toe. Wonderful suit, shoes that we'll talk about on another day.
Got to talk about the shoes. Yeah, got to talk
pretty freaking awesome. But with all of that, we actually had a good chance earlier to talk to one of his business partners here, but I want to make this all about you. I want to do a little rewind. I do not want to go all the way back to the womb. What I want to do, though, is kind of understand what you're focused on now, how it became your gig.
I got to give credit probably to my uncle. So my uncle was classic 80s Wall Street corporate raider. Yeah. You know, bold pinstripe suits, the white collar and cuff, cigar smoking, just a larger-than-life character who's from an era of Wall Street that is bygone. Right?
Yep.
But I remember fondly. And grew up, and it's a traditional Italian family, born in Brooklyn, 3 generations of lawyers.
A lot of big Sunday dinners, I'm sure.
I still do. I make the meatballs myself. I'm not giving away the recipe. Maybe that's for another show. We do a cooking segment. I don't know if we have time. We could.
We could go rewatch the movie No-No, which was excellent, by the way.
I haven't seen it yet, so no spoiler alerts on that for me.
I won't spoil it.
So growing up, I of course admired my dad, but admired my uncle, and he invited me in my last summer of high school to intern for Lehman Brothers. He was at the time the director of worldwide equities at Lehman, so like 3rd or 4th highest guy on the totem pole there. Lehman back then was still a storied institution, a partnership model, which is also part of a bygone Wall Street era. And said, "Hey, do you want to? Hey, kid, you want to give it a shot?" And I did, and I turned 18 on the floor of the New York Stock Exchange.
Wow.
That was at a time when we still traded in fractions. There was still open outcry. You could still smoke on the floor of the New York Stock Exchange, which made no sense to me, Lou, because at the end of the day,
there's paper everywhere.
Right, you'd be paper up to your, halfway up your thigh, and guys with an ash that's 2 inches long hanging out of their mouth, yelling and screaming into the specialist pits. But it was just the coolest possible thing. So I had the bug from there. Worked my way through Lehman, New York Stock Exchange floor, learned to trade options on the American Stock Exchange floor, which is not a thing anymore. And then was actually my uncle's right hand on the worldwide equity desk at Lehman Brothers and 3 World Financial Center, which was also an incredible experience. I mean, picture a 40,000 square foot trading floor, and he's sitting up on a dais, like 6 feet above just yelling and screaming at 1,000 traders and still, smoking, paper, the whole 9 yards.
For those only listening, you need to check out the YouTube of this to see how his Italian is fully coming out and how much he's talking with his hands. I didn't realize I better watch out for the wires that I'm dealing with.
Well, I've been known to knock a few out.
I believe it.
I'm a challenge for the TV producers I work with. So that was it. So I got the bug. But my dad said, look, kid, you're going to law school. You can always come back to Wall Street. Unfortunately, he said two things that turned out to not be true. Lehman Brothers will always be there and ready for you when you come back. Your uncle will be there and ready for you when you come back. My uncle, so while I went to law school, my uncle was asked by now Commerce Secretary Howard Lutnick to come and run institutional equity trading at Cantor Fitzgerald. Unfortunately, he was the lead man on the desk on the 101st floor of the World Trade Center.
I was across the street.
So as was I. So lost my uncle that day. Wall Street lost a legend. It's 25 plus years later, still talking about it, which is cool as hell. That's really sort of what got my start, and I've never stopped trading, but never stopped having the markets. Even during I practiced law for 20 years as a securities lawyer with financial institutions, brokerage firms, trading firms, hedge funds, that sort of thing, and never got the markets out of my blood. And the funny thing is, Lou, now, as you know, a lot of how I spend my time is as a financial media personality, so I contribute to name the show. But a lot of what I do now is appearances from the floor of the New York Stock Exchange, just 4 feet away from where I started my first summer internship as an 18-year-old. Yeah,
I will say this because I was recently on Cheddar on set in their studio, and there were two thoughts that went to my head. One, I forgot how small it is. The actual physical New York Stock Exchange, if anyone's ever been there. Like, when you used to see they'd have the camera angle of the person up on the balcony hitting the the hammer to start and close the trading session. You realize it's really not that tall and it's not that big. But what's even scarier is it's basically become a media floor. It is. It's a little bit of like a museum more than it is, what used to be like the center of commerce, which is so crazy, right?
It is. I mean, the action, to a certain extent, is still there. It's just, as we say, moved upstairs, right, to the computers. What's interesting, and as you know, I'm the CEO of an options trading firm, Market Rebellion. What's interesting is that the New York Stock Exchange has actually done a really good job in the past few years of bringing option trading volume to the New York. Yeah. So it's the options room on the New York, where we also have a broadcast location, is actually the room where there's still some yelling and screaming and some traders trading and some activity just other than the buzz of the CNBC post-9 broadcast booth. And it's actually one of the largest growth components of the New York Stock Exchange's business, which is otherwise now really, as you say, as a media company. So
media.
Yeah.
And let's talk about this. Here we are. We're recording this just before Memorial Day weekend. It's been some interesting talking head topics to talk about. I want to just pick one that's out there. Look, from February, late, really March, when all the tariff conversations started, up and down to now, you've been very busy. A lot of talking head stuff. The more interesting take I want to get is, as hard as this might be, let's pull the politics aside for a second and just talk about, I don't believe since the oil crisis has a policy deployed by the executive branch had such an effect on the markets. And I'm trying to think, maybe you could refresh my memory. I know there's been many that really comes to mind that really had such an effect, that has been an up and down and bouncing type of environment that would keep you certainly busy to talk about what's going on.
Yeah, well, listen, so first of all, I totally agree, right? So I've been going back to the whole background. I'll be in Wall Street now. I've got almost 28 or 29 years. So
it's amazing you still have your hair.
It's amazing I still look this young, right? It's of a face for radio as a
that Italian blood, man. They always had the really good hair.
This is true. So I've seen some market cycles, right? Quite a few market cycles, the great financial crisis and COVID and all of that. And I would agree with you and with that premise that we have not seen a administration that is putting forth policy, one, that is as impactful day to day, tick by tick as this administration. But it's also not just policy, but the vocalization of it, Lou, right? Yeah. So a lot of us call this market it's a tape bomb. Tape referring to ticker tape, right? Because it's not even so much what he does, it's what he says.
Yeah.
You had remarkably shortly after the tariff tantrum, which is what we refer to when, Liberation Day and everything that started thereafter, remarkably a week into it, I think it was a Tuesday, I remember John and I were coming off set, and Jerry and my business partner coming off set at Fox Business with Liz Klayman, and the president says, "This is a great time to buy stocks." And we're like, holy shit. Did the President of the United States just encourage people to go out? And, of course, the people on the left said, that's market manipulation and insider trading. And I actually went on CNN that night with Abby Phillips. This is a great show. It's not my political inclination, but I actually like doing shows where it's not just all, do you like Trump? I like Trump. Do you like Trump? Trump's great. Trump's great. It's not as intellectually challenging as when I'm sort of the conservative economist and market strategist in a shark tank of Democrats, right, which is part of what's fun about doing CNN. But I went on Abby's show, and she was sort of yelling that market manipulation, how could Trump do this? It's insider trading. And I said, Abby, you are aware that Congress people are immune from insider trading prosecution because they are actually
Right.
I'm sorry, but that sounds a little bit disingenuous to me. And they were like, cut to commercial. So,
You're hearing stuff in the earpiece.
yeah, 100%.
Right.
No, 100%. I'll send you the clip. It's a good clip.
So I believe that, look, sensationalist in the news, it's what gets entertainment. It keeps stuff going. I talked about this with your business partner, that it is amazing how that noise can be difficult to trade with and deal with the volatility, because volatility, for those who need to know, this is literally what moves options. But when you're able to move things that quickly, that, as you said, tape bomb like, it makes it challenging for traders. From the investment side, as you look, let's like do a little pushing forward. There was a lot of pressure to make sure tariffs had at least gotten calmed down by a very important date. I'm going to say it right now. We're here at the end of May. That very important date would be July 1st. Because if you want toys on the shelf in Christmas, you kind of have to make sure things are going to be okay by that particular midpoint of the year. Your take on that, I'd love to hear it.
Yeah, well, I mean, as President Trump famously said the other day, but maybe the kids don't need 6 dolls, maybe they only need 1 or 2, which I also thought was absolutely hysterical. There's no lack of entertainment value coming out of this administration, and it's funny, life coming full circle with Howard. As a Cantor Fitzgerald family, because of losing my uncle on 9/11, we have had a great relationship with Howard. He's been incredible to the families of the victims. To see Howard in this position as Commerce Secretary is great. He's very talented. Treasury Secretary Percent, I think, also very, very talented. But the date, that July 1 date, was less about toys and more about a sort of generally accepted principle among economists that went a little something like this, Lou. At some point in time, the damage from these tariffs, from these trade wars, would become irreversible. We would go from wherever we are now to stagflation to a full recession, which is defined as 2 consecutive quarters of negative GDP, and the damage would not be fixable. Okay, so watching things like the PCI, Personal Consumer Price Index, the PCE, and things of that nature, all of those inflation gauges and all of that data, I said very publicly, even though I am a supporter of this administration, that he had to get his act together, right? And the timing of the China announcement coming out of, I guess now, 2 Sundays ago, was not coincidental, right? Because we were coming up on that point in time by which, even if you fixed it, even if you stopped the trade wars and we went to 0 tariffs with China, which is, of course, never going to happen, that the damage to the economy would have been baked in. So that's the relevance of that date.
And a lot of people believed, like the supply cycles were all, the minute the rumors started of any of this stuff, it would put a little bit of a kink in the armor, because people are like, well, I don't know if the tariffs are going to come, so I got to protect myself.
Yeah. So what's interesting about that is we didn't see it happen as dramatically as some might have thought. And how do we see that happen? How do we determine that, right? What's the market science behind it? It's not rocket science. You've got this thing called earnings season that happens 4 times a year, right? And it goes so long that it feels like we are constantly in an earnings season, right? So if you listen And the CEOs, particularly of the more prominent, larger market cap public companies, were being pressured by their activist investors, their board, and by the streets, the analysts that cover these companies, to include commentary in their earnings calls of what planning, if any, they were making in terms of forward-looking. Are they reducing spending? Are they cutting back? Are they stockpiling? Are they doing these anticipatory moves, right, in an expectation that this trade war would continue for some undefined period of time? We didn't really see it. There were some companies that did it, sure, but by and large, CEOs didn't hit the panic button in the way that a lot of naysayers would have thought. And I think it's because... and then I'll shut up. I think it's because...
you keep going. You're the guest on the show. I can let it go.
Two things. One, that June, July timeline, and that the damage could not be undone. But second, love or hate Donald Trump, we would all agree that he does not want to lose the House in the midterms. No. So if he let it go past that point of no return date, and we went into a recession, and we lost the House in the midterms, we, from a Republican perspective, would be effed. And so I think a lot of CEOs, notwithstanding the noise of the talking heads, I know I'm one of them, but the talking heads, the cacophony of market talk every day, we just didn't see it happen because people knew, love or hate him, self-preservation, don't lose the House, get this shit over with before it becomes irreversible, and that's what's happening.
I was going to ask a question, but I don't have to. And the question would be that, you've been doing this for a while, and, if you think about your love for the business in the street, but also the love to talk about it.
Yeah.
Obviously, this is your gig. This is the passion of what you do. Is it as exciting to obviously, when you have the opportunity to be the talking head and be able to share your message, or is it the business side of what you still do? Is it, which hat do you like wearing more?
Well, it's hard to separate the hats, but I will tell you, if I think I'm understanding at least part of the sentiment behind the question, I still get the little tingles. I still get goosebumps. When I go on that news desk and the lights are on and the producer's in your ear, we're coming off commercial, 10, 9, 8, 5, and then the rest of it is just the hands, blah, blah. You get that. You get that little chill. It's still, and I've been doing it for 17 years, and it's still super fun. It's super exciting. I love sharing knowledge. I love the feedback. I love walking into a room like this and people saying, "Hey, Mark, I saw you the other day, and I love what you said," or "You're totally full of shit, and I think you're right." Like, it's intellectually stimulating. I'm a very social being, right? I come from a
can't tell. I can't imagine why we would
old school Brooklyn Italian family. It's kind of part of what we are. So I guess it all kind of blends together. But you can't have credibility if you don't know what you're talking about. Right. So you've got to have that, And like you interviewed John. I mean, John been doing this even 15 years longer than me. One of the greatest in the business. A lot of what I learned from him, from Maria Bartiromo, who is actually the person who I credit with giving me my very first shot, my very first interview on CNBC many years back. So, but yeah, it's still. And now the best part is my daughter, who's 17, wants to get into the business, wants to be a finance bro, wants to come work for the options firm one day. Whenever she can, she comes with me to the networks to be in the studio and just be part of it, and she's really inspired by it. And it's like,
let it be known. I, as somebody who is on camera all the time with whatever, there's some cringeworthiness going on there. Oh, Dad, don't go there. Come on, know that's happening. I just want to be clear.
Oh, yeah, for sure, for sure.
Let's do the admin part of the show. Share with the listeners where everybody can learn about you, find you, social handles, where the best part.
Sure. Well, you can learn more about Market Rebellion, which is the nation's premier place to learn how to trade equities and options. You can find out more about the education and signals that we offer at www.marketrebellion.com. You can follow me on X, formerly known as Twitter. My handle is MXLESQ. That's an homage to one of my previous professions. I think my handle on Instagram is MX LoPresti, and I don't really use TikTok, so
it's early yet. We'll get him there soon.
Yeah, that's maybe for the shoes.
We're gonna do the shoes. We'll take a picture of the shoes and put it on. It's like a very.
It's a Palm Beach motif.
It's a Palm Beach motif loafer. At that, yeah, we'll make sure we put it in there. I like the look. We're just going to give you 3 questions of our abbreviated speed round here, which I know you're going to handle well. Ready?
Go for it. Yes.
An activity you wish you did more of?
Spend time with my kid.
An activity you wish you did less of?
Eat.
I mean, like, people are going to watch this in different shows. We just had that as another response from the gentleman to your who's still here. Matthew Levenson had the exact same thing. He said,
"No, Matt, great guy. And it's not because I don't love food. I love food. I wish I loved food less."
Okay. A new activity, one you've recently tried, you like so much, you want to tell everybody else to try.
New activity that I cannot think of one. I spend most of my time
doing what he loves.
Doing 3 things: fighting, screwing, and doing the new. No, I'm kidding. That's a line from Anchorman. You got to give a shout out for that one. But
Marc LoPresti, totally an honor to have you on the show, my friend. Thank you for being here. Great to connect with you, man.
Anytime. Thank you, sir.
You got it. Welcome, everyone, to another spectacular episode of Thrive Loud with Lou Diamond, connecting you to the most inspiring and amazing people that are thriving each and every day. I'm your host, Lou Diamond. Today on Thrive Loud, we've got a very cool individual I'm excited to have here. Matt Levenson, welcome to Thrive Loud.
Thanks, Lou. Great to be here. Appreciate you having me.
I am very curious. You have a story. You have a history. You have an entrepreneurial journey. For those, I will put this all in the bio, but he's going to talk a little bit about it here. Here's what I want to do. I want to do like the runway. I don't want to go all the way back to the womb. I kind of want to go to how what you've been focused on now became your gig and how you got there.
Great question. Thanks, Lou. So it starts with actually my first business, which was StubHub, an eBay for tickets. We ended up selling it to eBay.
Right.
And I fell in love at that point with what we call the marketplace model. So it's really the same dynamic, whether it's a car from Uber, a vacation rental from Airbnb, a ticket from StubHub, delivery from DoorDash. You have some kind of fragmented supply. And when you aggregate that fragmented supply into one digital experience, it's much more convenient for the consumer and completes the experience for the consumer. It's much better for them than going to each one of those supply on your own. If you had to get a ticket to the game and figure out where to go without StubHub, that's a pain. If you got to find a taxi, that's a pain. You got to find a vacation rental in Italy without having Airbnb, that's a real hard thing to do. So we, after selling StubHub, we kind of looked at what's the largest market for a marketplace, and really it's retail, where you've got kind of Walmart as the biggest retailer at less than 10% of sales, and then you got 4 million other retailers that aggregate the rest. So if you can aggregate that, you're better at driving business to that supply in that marketplace model than they are on their own, and for doing so you get a commission, 5, 10, 20% in some cases. And so that's one of the starting points of the genesis. The second is shopping's a nightmare. The internet was supposed to make this easier. It's kind of the paradox of choice. So if I want to find a TV, I have to start with searching and then clicking and then reading reviews. And is this brand real? Is it new? Is it refurbished? Does it have all the features I want? And it's just become an unwieldy hassle, let alone finding the best price at the end of that. Is another level of searching and comparing and tabs and email searching and apps. And on the brand side, the merchant side, or even the products you sell, they don't know who their customers are, and they can't target you with the right message at the right time. So you walk into a Target, you swipe a credit card, you bought a Coke. Coke doesn't know it's you. Target doesn't know it's you. Their marketing's very opaque. They don't know what the ROI is on any of their advertising. So we said, this needs to be solved. And so we solved it with Pepper, which is a shopping AI assistant. On the consumer side, let the AI do all that work of finding the right product for you based on your preferences or a few questions we need to ask. And then find you the absolute best price, considering coupons, your loyalty programs, price comparison, all those things that the algorithm can do. And then buy it for you. And it can do that in minutes instead of hours and open tabs and endless searching. And for the brands, the merchants and the products, we're able to say that, hey, Lou is a high-valued, lifetime value customer. You want to get Lou in here, offer him a little something extra, target him with this, that, or the other. And we're able to drive them net new customers, incremental sales, and ultimately ROI. And for that in the middle, we get about a 7-8% commission when we do.
Oh, I love it. So aggregating all the places that people can go, using AI to customize the experience to the end user, and maybe most notably in this, giving value back, obviously, the information to those of the brands, and you guys make a cut out of the whole deal.
That's right. We don't give them the data because we're stewards, but we allow them to access through us,
Right.
and we're making recommendations of what they should do with ROI as sort of predictions, and then we can prove it and back it up at the end.
Where are we today with Pepper? How far along?
Yeah,
in this process
great
are we?
question. So first, we've got about 7,000 retailers on board. Basically, I don't want to say everybody, but our biggest are Amazon, Walmart, and Home Depot, and we've got all the category killers like Best Buy, IKEA, you kind of name it. So the retail side has been filled in all the way. We started really scaling the consumer side about 15 months ago. Last year, we did about $250 million in what we call gross merchandise value. That's sales on the platform. Mm-hmm. Then we make 6 to 8% of that. First quarter this year, we crossed $200 million. We're looking at about $600 million this year, targeting passing that billion mark. Run rate by the end of this year, but in 2026, really crossing kind of 1 to 2 billion. And we just see the largest potential market there is. If you look at the marketplace model, as I kind of started out with, Airbnb, DoorDash, Uber, those are $50, $100 billion kind of total addressable markets.
Right.
This is $6 trillion a year of commerce going on, retail sales. Another couple trillion of the products that people buy. So if we're able, and we believe we can, aggregate this in the same way that each one of these other marketplaces has, you've got a $100 billion to multi-$100 billion opportunity. So we're really seeing this as something that can transform shopping and build a long-term sustainable business that's just enormous in size.
Let's go back to some of the stuff that's out there that is, I don't want to use the word competing, because I literally was just thinking from all the places that try to give you discounts when you're shopping. It's more on a price-based component here. You're combining both. You're doing, let's find the best value for you, but let's also customize that experience. And we're pushing the products that you're looking for that make sense, versus plugging in a Rakuten code or any of the other alliance affiliate programs that are out there. With the brands and trying to bring people into Pepper, is it a challenge? Is it become noise? Or is it, hey, you make the sale, we're going to give you a commission anyway, and therefore we're okay as long as you're delivering?
Yeah, so you kind of got two different questions in there.
I asked a lot of questions. I apologize. I dumped them all together.
How do we compare to like a Rakuten?
Right.
And then second is, how do the merchants like it, and how hard is that to do? So
he's a good listener.
On the Rakuten question, Rakuten's done an amazing job, obviously. Our feeling is that the Rakuten model is where the puck was, not where the puck is going.
Wayne Gretzky in the building.
I've seen him play. That's to date myself. But with Rakuten, you are, on the one side, you're trading convenience for a discount. That's essentially what you're doing. You got to go through this platform, click here.
Yep.
You got to pay attention. Sometimes we believe in the genius of and. More convenient, more personal, more savings. Not convenient or savings. Right? Where I have to pay more if I want a convenient, and I could save if I'm willing to jump through 3 hoops. AI doesn't allows you not to do that. So with us, you're getting something, one, that's personal. It knows you. It learns. 2, it's prioritizing getting you that best product, value combination you want. And then 3, Rakuten is just giving you an affiliate discount at that moment, whereas the Rakuten discounts are part of the equation. If you have a loyalty account at Adidas and you've got a 30% out coupon in there, Rakuten doesn't know that. We do. Mm-hmm. If there's a new sign-up offer, we do. So we're incorporating many other discounts and then combining all that so you can decide, I want it tomorrow and I'm willing to pay. I want it in an hour and I'm willing to pay, but still give me the best price that way. Or I'll wait 2 weeks and give me the absolute cheapest price. So it's product price comparison, coupon codes, affiliate offers, your loyalty account all rolled into one that the AI can automate for you.
And by the way, you just made my wife's job happy. She is always going around finding the best coupon code, finding things here. And I do realize that, where the puck was is a phenomenal analogy. because I believe what AI is leading us to, whether from ChatGPT to any AI platform, is the ability to not click.
Exactly.
And get away from that.
It's a conversation that it understands what you
clicks.
want,
Yeah.
and then it does the automation of all that clicking and searching for you.
Right.
One other thing you said right there is that your wife is searching and doing all those things. She'll do that. A lot of people won't. So if you look at a curve, we look at everything as a bell curve, right? So you have a savvy shopper, we call your wife, down at the left side of the bell curve. I'm willing to do all that work to save the $50, $5, $10. 2/3 of our
$2.
society is not willing to do that work.
Right.
And it's not about that it's not worth the effort. It also says who we are.
Right.
It's an emotional thing. As it becomes more convenient, it becomes more mainstream, right? So why wouldn't you do it if it's actually adding value to my search and then saving money? Nobody wants to pay a dime more than they have to. They're just not willing to do that extra trade. So every one of these marketplaces has also moved up an adoption model in the same way or similar. So, for example, Uber went the other direction. It's black cars in San Francisco, so it's the other side of the bell curve, the high-end shopper.
Right.
They've said, how do we get across to the mainstream? Well, UberX. Airbnb went the similar direction. Couch surfing, right? So people really actually trying to live on
on couches.
on a blow-up bed on somebody's floor, right? And they say, okay, well, how do we make this to the mainstream? Then you get renting rooms, then you get vacation rentals, and now we're going up the bell curve in that manner. So the same idea here, right? Rakuten's 10, 15 million consumers that are willing to do that work for the discount, but you got another 300 million in this country and worldwide that are not willing to do that we're trying to basically go to the mainstream with.
Matt, have you run into challenges getting the retailers on board?
That's a great question. So everything's challenging. Let's start there.
Some more than others.
We started out getting the retailers. I mean, essentially, I would get an introduction, a warm lead to the right person, me. Now we're bigger company, and then I'd follow up twice a week until they signed up or got a restraining order. Fortunately, no restraining orders, so you got to give you a chance. Now, it's getting to give you a chance takes a lot of hard work, but over the long haul, you need to prove your value. Yeah. Incremental sales, incremental gross profit. So that mission never ends. It's an infinite game. Yeah. There is no scoreboard. Game's over. We won. You keep innovating, adopting, and growing, and getting them where they want. It's also to their individual needs. Some want more revenue right now. Some want more gross profit right now. Some want more new customers right now. Some want to squeeze more value out of existing customers and incremental sales. So you're working with each one of these big guys in a different way to give them what they need. And that will never end, just like any other advertising platform.
Pointing this to you, obviously, as someone that has had a successful exit, what's the hunger that keeps burning? What is the thing that made you say, I want to do this next? What is the thing about Matt that says, this is what I need to be doing?
It's a great question. So I also do this with everybody I hire and who works for me. It's sort of the existential question. Why do I exist? Why am I doing this in my work life? And what gets me up in the morning, let me start here. I would not be doing this if it was philanthropic, okay? You have to be a masochist to do this. There's a lot of...
Specifically in retail.
There's a lot of easier ways to make money than being an entrepreneur. But what I want to do is transform an industry and build a legacy that me and 40, 50 people that wouldn't exist if we didn't do it. That is a brand and a product that consumers use and love, that merchants come to know and love, transforms their advertising, transform how people shop. Employees love working at that. The whole is more than the sum of its parts. I went to Wharton undergrad, trained to do this. Been doing it my entire life. I want to live my life's legacy. The analogy I'd put out there is, if I had stopped before this or gotten a job, it'd kind of be like Charles Barkley is to, I don't even say Michael Jordan, but let's just say somebody who won the championship, right? Mm-hmm. You have a great life, you did it, you made plenty of money, you're having fun, but if you don't win that championship, there's a chip missing until you do. Dan Marino, etc.
Charles Barkley.
Yeah, exactly. So
sorry, Charles.
I want to win the championship. You got my work career here, and I know a life well lived would be achieving something like transforming how people shop for the long haul, and building a legacy there.
I'm going to do the speed round here to make things a little bit of fun, but beforehand, share with the listeners all the ways that people connect with you, learn about Pepper, anything you want. The forum's yours. Plug section.
Great. We're live, gopepper.com, shopping AI assistant. If you want to contact me directly, my email's coach@gopepper.com. Love to hear any feedback, thoughts. One thing, the older I get, the less I know, and we aim to get it right, not be right. So open to people's thoughts, questions, ideas.
Okay, we're going to do this very quick speed round here that we do on the show normally. We're here obviously at the Wall Street Conference, and actually I'll even start with that just to go on. What is your goal to take away from this event? What are you looking for today?
That's a great question. So I'm presenting as part of the American Startup Shark Tank offshoot, if you will, which is fun. Jason is our first outside capital. Has been a great supporter of the company, so I'm always here to support Jason. We're just closing up a round as well, sort of a Series A round. So, we're here to support Jason. I love doing these kind of Shark Tank style fun competitions, and we'll see if we get some investors that fit with what we're doing at the same time.
Perfect. All right. Three questions to kick this off here. An activity you wish you did more of?
Yoga.
An activity you wish you did less of?
Eating.
A new activity you've recently tried, you like so much, you want to tell all the listeners and viewers to try?
That's a great question. Not much there. I'm a pretty creature of habit and focused on my kids and my business, and there's not much room for anything newer else. So I don't have much there.
Matt, the coach at Go Pepper. Go check him out. Thank you for coming on the show. Excited to hear what you're doing. I kept it on the sidelines. I had a bad experience a long time ago with StubHub.
Let's hear this.
Here's the experience. Son and I, my son's a big Bulls fan for whatever reason. I'm a New York Knicks fan. I don't know how that happened. Blame Space Jam and David Falk for all the movie he produced.
Michael Jordan, I think, really.
Might have been him too. So bottom line, we go there, and I go to claim the tickets, which I got off StubHub. One of them was real. One of them was not. It was like a bum ticket. Someone duplicated it and put it up through StubHub. So there I was with my kid going to a Bulls game. I only had one of the two seats, and it was a sold-out game for what it was. And fortunately, they made amends for it, which they had to deal with. But the stress of sitting there trying to then get tickets, and I had to buy tickets out of my own pocket to deal with it, because this was back in the early 2000s, let's call it 2005 or 6 or something like that.
Okay.
But I remembered being like, I am never purchasing anything on StubHub again. But to be clear, I definitely did. I don't know if it was the Knicks' fault or my own fault, but I got scammed on some fake thing at that time.
Interesting, but we gave you your money back, correct?
You did. They did.
So let me tell you how, first of all, it's unavoidable to get a scammer in there. And we had the StubHub guarantee. I think it's called Fan Protect Guarantee now.
It was a little delayed to get it, but I got it.
Okay, it shouldn't have been. Let me give you a quick story on how we came up with that. We had not yet launched the site. We were pitching the general manager of the Ducks and Angels. It was owned by Disney at the time, who we had networked into, trying to be their official secondary ticket provider, me and our CEO, founder, Jeff Fleur. And he says, well, what happens if somebody shows up with a ticket? Exactly in your experience, Lou. And I said, we have the StubHub buyer guarantee. We collect the money from the seller. We give the tickets to the buyer. The buyer has any problems, we either get them the same ticket of equal area or value, or we give them their money back. And Jeff looks at me like, what the hell are you? Well, we made it up on the spot to answer the objection of the GM of the Ducks, and then we did it. And customer service, I believe, is a key differentiator of any business. So sorry you had that experience, but glad we made it right.
I'm not blaming you. I'm just blaming the situation.
We were proud of that customer service, and it was a model that a lot of companies followed after, because people were starting to do the hands-off. You've got to search through the endless thing, and the whole part of that marketplace model is that you're facilitating the transaction, and that trust is there.
Well, and I think we've learned this from numerous CEOs who sat in that chair and been on this program. The value of the customer experience isn't just what they bought or where they went. It is the entirety of the whole thing, and their memory of it, the involvement of it. Disney's figured this out a long time ago, figuring out like, hey, it's what you do when you're at the park and the memories you have from it. And I think you're creating new memories with this shopping experience alone, which I think is pretty cool. So
appreciate it, Lou.
You, man.
Thanks for having me.
To all of us, thank you. To all listeners, thanks for joining us. Until next time, keep moving onward and upward, and remember, be brief, be bright, be gone.
You've been listening to Thrive Loud with your host, Lou Diamond. Check us out on the web at thriveloud.com and follow us on Instagram, LinkedIn, Twitter, and Facebook at Thrive Loud. And check us out on the Good Pods app at Thrive Loud, where you can follow, listen, and connect directly to Lou and all of the Thrive Loud episodes. Thanks for listening.